Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Still going strong for the markets. The Nifty is at the high point and so is the Midcap Index. So let's get chatting with some of these Midcap names now. Steel Strip Wheels, it is in focus. The company reported growth in its tractor sales for the month of March. Well, if we talk about the overall numbers, overall the growth has been 0.5%. While tractor and alloy wheels have done well, exports have been a drag. To understand what the outlook going forward is, because the management in the recent interaction had told us that Q4 will be the best in terms of exports. What's the outlook now? Mohan Joshi, the head corporate strategy and investments at the company, is joining us now. Mohan, good afternoon. Thank you so much for joining us. Well, the last conversation that we had indicated that Q4 will be the best quarter for exports for the company. But this time, in this month itself, it's a 41% decline on a YOY basis. Even quarter on quarter, or a month on month, we have seen some decline. What led to this, and do you stick to your 300 crore rupees export guidance for this year?
Hi, thanks a lot for having me. I think I still stick to the 300 crores plus guidance for me. What I gave maybe 1 month back for this financial year. And we are fairly very strong for the Q4 for exports. And we feel that the trend is going very strong with addition of alloy wheels as exports for financial year 23-24. And we feel that a 500 crores plus, 550 crores plus kind of exports in financial year 23-24 is fairly possible.
No, what I meant to say is that exports are down, right? This time around, on a YOY basis, we have seen a 41% discount. And I'm going by the report, it's a 36% discount even if we go by numbers. How are you saying that exports have been good in the month of March?
I think it is a YOY comparison, which is not a fair kind of a thing. If you see a month-on-month kind of a situation, it is fairly very, very strong. We don't give that number. But YOY was a base which was set last year before the US recession and the European recession, which is where the trough was made. And now we are on a month-on-month and quarter-on-quarter improvement.
So can you give us an approximate indication, month-on-month, you're saying there is growth in exports? Is it in single digits? Is it in mid-teens?
It's in double digits. It's in more than 15-20% kind of growth in month-on-month.
So exports are up 15 to 20% in the month of March, month-on-month. And what about Q4 versus Q3?
I feel from Q3 to Q4, the numbers will be close to 20% higher than the Q3 numbers. And as I said, for the next financial year, we are anticipating more than 50-60% jump in these exports because of this year being a one-off, given the situation which has happened on transits, on inventory, and on the Europe and US economic situation.
Okay. So this is about the export market. Tell us more about the tractor segment, because that seems to have done well, 33% growth on a YOY basis. How did it perform quarter on quarter? And if you can give us a sense of the demand is panning out. Now we are talking about normal monsoons. Do you think that you can do better than this?
I think in financial year 23-24, we will be up 5 to 6% in terms of the tractor sales. And for the financial year 23-24, we anticipate with the additional customers getting added, this growth could be around about 7 to 9%. And I feel that the trends are good. The export markets are also picking up, and we are entering into the export as well as OTR markets for this segment. So I think financial year 23-24 will have a better year, inside for us.
You have been maintaining that. Mohan, so as operating leverage starts kicking in, with growth picking up on all fronts, what could your gross margins look like in FY24? Can they go back to that 40% band?
I think gross margins is in nobody's control right now because raw material prices are still very, very volatile. But from a EBITDA point of view, I think we did close to 450 odd crores. And the intent is this is despite the falling raw material. And we feel that we can better it by another 10 to 12% in financial year 23-24. And with all the cylinders working fine for us in terms of alloy wheels, in terms of tractors, in terms of PVs, as well as a recovery in exports, this is a fair sight that I can share with you.
Okay. So when you talk about raw material prices coming down, how much have they come down from peak? And what about working capital in this case? Are you looking at inventory levels changing because of the demand that you are anticipating?
So from the peak, I feel the prices have come down by 20% and they are stable for past 4-5 months. We anticipate that the prices may go up a little bit, maybe 4-5% from April onwards, and that will not put a lot of pressure on the working capital side. And in the previous year, despite record raw material prices, we managed the working capital cycle well in control without taking any additional limits. And we feel that this relaxation of 20% in terms of raw material prices will give cushion to the company's balance sheet.
So you are trying to keep your working capital under control. What about the overall debt, the net debt, the long-term debt? What is the outlook on the long-term debt?
I think last year to this year, we have reduced the gross debt by close to 120 odd crores. And we anticipate this coming financial year will also be reducing the debt by close to 100 crores. And we feel that there are two things which are coming in next financial year. One is the AMW, which is the NCLT assets, which we are talking about, which is still in the courts, and we are waiting for that. If that doesn't come out, because that is going to be a one-time investment, which is going to be coming in 23-24, which is going to be giving up a pickup on the debt side via bridge loan, while the EBITDA comes in and bridges the liability that we are going to be taking up as AMW.
Okay, so Mohan, in that case, what kind of Capex plans do you have in place? You've made smaller acquisitions in the past, right? Do you think that is some strategy that will continue? And what is the kitty for this acquisition, say for FY24 in particular?
I think in financial year 22-23, we tried doing some joint venture and we tried doing the NCLT asset acquisition, which is still under progress. For financial year 23-24, we are anticipating the alloy wheel expansion to cater to the domestic as well as the export market, which in total, along with small projects, is pegged at 140 to 150 crores in terms of the Capex. And going forward, with the cash accruals being strong, consolidation and inorganic assets will be seen within the relevance of the business, which is like wheels or wheels, which we think is going to be the strategy going into 23-24 and 24-25.
And what is the amount that you've set aside for this
between 40 to 50 crores.
40 to 50 crores, okay.
We'll leave it to that. Thank you very much for joining in. That's the word coming in from Steel Strips Wheels.